The financial crisis part 2 continues to rage on as the global stock markets are in a panic. Today we will discuss how China is going over the cliff. You came here for the truth, so let me unveil that for you. Of course, it isn't just China that's going over the cliff. They are taking the whole world with it. The whole world, in fact, has their own set of problems. But today we're going to focus on China and how that's affecting the global economy. Let's begin here with the stock markets, talking about the U.S. stock index futures screaming lower on Monday, with the Dow futures briefly tumbling more than 700 points as fears surrounding the health of China's economy multiplied. We're looking at a serious situation right here, and they actually said it's one of the worst opens since the financial crisis of 2008. I suggest here, and we'll show you more examples, that we are headed into this financial crisis part 2. It has begun, in fact, in many ways, and you can see that the stock market is absolutely exaggeratedly going crazy right now, and that is expected. Alarm bells rang across the world markets on Monday as a near 9% dive in the China shares and a sharp drop in the dollar and major commodities panicked investors. This is a very serious amount when it can drop so drastically for such a large market. It's not some sort of nobody type market. We are looking at a very serious scenario, with European stocks down more than 5%. Wall Street braced for similar losses in Asia. They're slumping to 3-year lows as this 3-month-long rout in Chinese equities threatened to get out of hand. Oil's down 4%, while the safe haven U.S. government debt here, German bonds, and the yen and the euro rallied as widespread fears of a government-led global economic slowdown and currency war kicked in. We are seeing the currency wars take place. I'll talk more about that in a moment, but essentially what we had just previously as the stock markets were increasing is now starting to come to a halt. We had everything in place. China was buying up the U.S. debt. The Federal Reserve was buying up the U.S. debt. QE3 was doing so well for the economy, or the stock markets anyway. And this was painting a rosy picture around the world. But things have suddenly become quite a different scenario. It's a China-driven macro panic. That's what one individual is saying. However, I would have to say that China is just what we're focusing on today. The whole economy around the world is suffering, and stocks are completely disconnected with that. Yes, right now they're going back to, let's say, sane levels, but it doesn't matter because we're looking at an economy that's dead. As I've covered here many times before, world stocks sank on Monday after an 8.5% plunge in Chinese shares that stoked mounting fears of a China-led global economic slowdown. Monday's moves left Europe's main stock benchmarks on track for their worst monthly decline since October 2008 at the height of the financial crisis. Again, showing you here that this is bad and this is getting worse to the levels we saw a few years ago. Actually, China's news agency dubbed today that I'm recording here as Black Monday. This is going to go down in the history books for sure. China poised to raise banks' liquidity to boost lending. This is what they do every single time that they have an issue. This happens to be the situation here. The People's Bank of China is preparing to flood the banking system with liquidity to boost lending, according to officials and advisors to the central bank, as its recent currency moves are squeezing the yuan funds out of the markets and renewing concerns over capital leaving Chinese shores. What they are doing here is basically cutting the deposit rate that they need to have. There's a reserve requirement. Let's just say you need to keep $1 in the bank for every 10 you loan out. Well, now it might be a lot less. $1 for every 20, or 1 for every 100 or 1,000, or who knows? Why even have that reserve requirement in the first place? Just give out as much money as you possibly can. That will fix it all. In my book, I talked about the symbiotic relationship between the U.S. and China, and what we have is this. With China buying the U.S. treasuries, keeping them for their reserves, we think that they're doing this for a business deal, but really they're being used and abused. And of course, all countries use each other, whether it's Saudi Arabia using the U.S. to protect its oil rigs. But look at this here. They want to support the value of the dollar by doing so. This keeps the dollar floating higher than where it actually should be. At the same time, in relative terms, it keeps the Chinese yuan lower than what it should be. This is a currency war. You can use this method of buying up a country's debt in order to make your own currency more affordable. Very interesting the way it all works, because it's all of these foreign exchange markets. Look at this out of the Financial Times. The latest tumble left Apple shares more than 20% below their level a month ago, wiping $150 billion from its stock market value. Tech valuations are looking pretty good now. They're looking really good, in fact, unless we're headed in a global recession. That's the type of thing that I hear from these so-called analysts, so-called experts, that look at the numbers, look at the statistics, and they say, look, everything is great. It's doing so well. And unless we're just, headed into a recession, well, then pump your money in. But if we are, well, then put your money in something safer. Perhaps it's what they always suggest is, blue chip stocks or government debt. Something safe. And then when the market is all good again, you can pump your money back in. But this doesn't work like that, because if we're in a global recession, which now it seems like all recessions are going to have to be global because the markets are so interconnected, intertwined, it's going to be more than just a recession. Look at this here. We're looking at the PMI. Think about this as the manufacturing index for China, and it's going quite bad at this moment. In fact, it's the worst reading since March of 2009. March of 2009 being the actual lowest point of the financial crisis. It's in the depths of the global financial crisis, the sixth straight one below the 50-point level for that indicator, which separates growth in activity from contraction on a monthly basis. So what we have here, one additional indicator showing you back into the financial crisis. I'll show you every single indicator there is. I'll keep spamming everyone with the indicators here because that's what I'm here to do, to push the alarm bell and have you realize how bad things are. Look at this. Angry investors capture the head of China's metal exchange. These people are not happy right now. They're tearing this individual up, and it isn't looking good for him. But think about this as simply what's going to happen in the future. In the U.S., in the U.K., and other countries, major cities are going to have the same issue, whether it's for politicians or whether it is for people in the finance industry. Then you look at this, China's leader here at the center of concern as the market begins a new week. He's obviously going to have to come out and make a statement here. And he's going to say, don't worry, we're going to print some more money. We're going to loosen the lending practices. They're going to give out loans to people who can never pay them back. They're going to build new subdivisions and new cities. They're going to build infrastructure that doesn't need to exist. And this is what you do. It's the most giant public works project that ever existed in history. Why? Because he doesn't want to end up like the guy in the previous tab. If you found this video informative, please give me a thumbs up. This crisis that we're headed towards, that we're headed in right now, is only going to get worse. So my recommendations to everyone is to prepare. Whatever that means to you, just prepare. Don't sit on your hands. Get out there and do what you have to do. If you found the video informative, I know you'll find my book, The Money GPS, even more informative. And you can actually flip through the book. If you go over to Amazon, they have this look inside feature, which allows you to flip through the book and see if you like it. Take care.